Despite Tesla's incredible achievements over the past 14 years, from near bankruptcy to the world's most valuable automaker, 2023 is a chance for the company to truly separate itself from its competitors once and for all. Elon Musk, the CEO of Tesla, predicts a massive wave of new products in 2023. Furthermore, we all know how shocking Tesla's Q2 profit margin of 2021 was, so what does the future hold for Tesla? Will Tesla break through its all-time high this year? What are the predictions for this year and the future of Tesla? Make sure to stay tuned until the very end to find out. Let's get started. Tesla Incorporated posted results for the second quarter of fiscal year 2021 that analysts estimated. Earnings per share adjusted for inflation rose to 230% year-over-year, beating estimates by 46%. For the first time, quarterly net profits reached $1 billion. Revenue also exceeded expectations, increasing by 98% from the previous quarter. Tesla's vehicle deliveries for the quarter, which were announced earlier this month in January 2021, were 201,250, roughly meeting analyst expectations. Tesla's stock has returned 113.6% in the last year, far outperforming the S&P 500's 36.5%. We feel that we're about to enter the next phase of Tesla's story. It's a significant jump in the S-curve, and it'll be a big jump in the S-curve. It'll be the first time that Tesla has complete control over the most limited component in their products. Aside from the temporary chip scarcity that is, it will allow Tesla to grow at its own pace rather than at a pace at which their third-party suppliers want or are capable of producing batteries for them. There will be no more excuses for Tesla's future growth, at least until supply chain difficulties are no longer an issue. Many members of the Tesla community are ecstatic right now. We're aware that some huge events, and we mean major, are approaching, as well as a great deal of celebration. Everyone is ready to party as if everything is set in stone. However, we have no idea how some of these will turn out. We anticipate that the Berlin and Texas production lines will run smoothly. Tesla has a lot of expertise putting up new manufacturing lines. Despite the fact that these factories have a lot of new processes, Tesla has been running and testing them for months because the buildings are taking so long to come online. Tesla, on the other hand, does not have a history of producing batteries, and Tesla has essentially staked the company's future on this battery production line. Their largest factory has a capacity that we can only guess at, but such a capacity is only required if enough batteries are available to go into the automobiles. We've only received official word that enough 4680 batteries have been manufactured for around 1000 Model Ys from a facility that was expected to produce 20 gigawatt-hour of electricity per year. Tesla is evolving from an electric car manufacturer to an electric vehicle and battery manufacturer. Hold on there. If you're a fan of Elon Musk, you should know that Tesla is a robotics, AI, energy company. Tesla does AI, robots, and energy, yet none of these areas generate revenue for the company. Not even FSD. They may sell FSD, but it is insufficient to support their R&D costs. All of Tesla's divisions, including AI, robotics, and energy, are losing money. The only part of Tesla's operation that makes money is selling cars. Tesla's 4680 batteries, on the other hand, will be extremely profitable. Not only will these batteries be substantially less expensive than the 2170 from factory batteries, but due to other breakthroughs in manufacturing, Tesla will require fewer batteries in each vehicle, saving even more money. Increasing gross margin by an additional 10% is possible, and while it may only appear to be a one-third increase in gross margin, which is significant, that margin is felt all the way down the line. When it comes to operational profitability, we've made a 66% improvement. In addition, there has been a similar increase in net profits. Consider how much one component of your product could boost your profitability. This will undoubtedly be reflected in the stock price. This has not been included into the market. It's possible that you could say the same thing about FSD if it became a reality and had a far greater adoption rate. The 4680 is meant to be erected quickly, in addition to saving money and increasing efficiency. To alleviate some of Tesla's large battery restrictions in order to produce as many electric vehicles as feasible, no one is or can build batteries quickly enough to match the demand for electric vehicles, which is one of 4680's key goals. Tesla has a lot of demand, and the biggest barrier in manufacturing will be batteries. Not just for Tesla, but for all EV manufacturers, which is why they are all scrambling to partner with battery business and build these absurdly costly batteries right now. Elon Musk and Tesla have proven themselves time and time again, bringing the impossible to life. We're confident that this time will be no exception. It hasn't always gone smoothly in the past. One of these examples is production hell. Elon Musk and Tesla, on the other hand, tried everything they could to resolve the situation, and it was a stressful moment for everyone concerned. They persevered, and they aren't the only BEV producer to achieve mass production. To be pedantic, the only BEV company with an airbag-equipped vehicle capable of mass production. This time is different. Tesla is now a hugely profitable company capable of supporting the additional factories as they ramp up to full production and beyond. Money can be thrown at difficulties if they run into problems. There is now a $1 trillion valuation as well as a sizable war chest. We know the battery is real, and they've manufactured 1 million, if not millions, of cells. It's only a matter of scaling it up, and if they can, they'll know it's worth trillions of dollars more. We anticipate that because this is such a demanding endeavor, not everything will go as planned and problems will inevitably arise. Take a peek at the factory's size, for example. To get everything up and running, there was a lot of work to be done. Furthermore, Tesla's new plants will take some time to ramp up and reach full production capacity. Whether they produce 5,000 or 50,000 units each month, they face much of the same expenditures. To take advantage of the economies of scale offered by these new plants, they must ramp up to volume production. In fact, Texas will almost certainly need to go much beyond volume production. We've seen how quickly Tesla can hit volume production in Shanghai and how quickly some of the cars have gone off the line there as well, roughly 1 million vehicles per year, and since Tesla has banned drones from the facility, there are claims that Tesla has now hit even faster rates. We don't anticipate these facilities will have any trouble attaining a high-speed production rate, at least once the component restrictions have been addressed. The constraint will quickly come down to batteries. Berlin is utilizing 2170 batteries, which are obviously in short supply, and Tesla isn't investing in significantly increasing the supply because the 4680 is simply so much better. Tesla appears to be producing only the performance model there as well. So there wasn't much of a rush to get the Berlin production up and running, as they'd already run into battery limits. What matters in Berlin is the Berlin 4680 factory, and it will be fascinating to observe how quickly the 4680 factory in Texas begins producing batteries, as this will provide some insight into how long Berlin will take. Approximately 20 gigawatt-hours of LG 2170 batteries are expected to arrive in Berlin. That's enough for around 250,000 Model Y shows per year. That's about the rate Berlin is expected to hit by the end of the year, according to our estimates. So maybe there are enough batteries for Tesla to start mass producing performance modules in volume. Although, unless the demand for performance alone is extremely high, we believe Tesla will begin producing long-range vehicles there as well. As a result, Tesla may introduce the 4680 variant in Berlin before the end of next year. Our current ideas on the stock price are that it might hit an all-time high given the opening of Texas and the arrival of 4680 vehicles on the market. We're hopeful that the specifications for these vehicles will astound everyone and that the market will recognize that Tesla has once again reinvented the electric car. After that, we'll get the earnings report, and we're anticipating margins to blow everyone away, as well as incredibly high profits and an astounding EPS, despite some one-time OPEX charges owing to supply chain concerns. Then there's the possibility of a good earnings call. However, it's difficult to predict what will happen after that. We believe Tesla faces another difficult road ahead of them, possibly another manufacturing nightmare. It may turn out to be a challenging year. At the very least, we may rest comfortable that these products are in high demand and have large profit margins. Tesla has some of the best people on the planet working on it, and they're working as hard as they can. We believe that this year will reveal the full extent of Tesla's capabilities, with a significant rise in the S-curve in 2022 and 2023. Tesla's shift to a battery firm is likely to be volatile this year. This ends today's video. Thank you for watching the video. If you enjoyed it, please like, share and subscribe to our channel for more awesome videos like this one. See you in the next video.